SpaceX's daily launch cadence has driven the cost of reaching orbit from tens of thousands of dollars per kilogram down to the hundreds. This infrastructure rollout has reached a scale comparable to the global airline industry. But for the average investor, the company remains strictly off-limits. The highest growth phases of this expansion are occurring behind closed doors. For now, the equity is restricted to venture capital firms and elite institutional founders. However, the massive expansion in orbit is actively pulling a specific group of public companies along with it. Institutional traders are currently positioning in 6 specific tickers to capture the momentum of this trillion-dollar wealth transfer. This pattern mirrors the early rollout of the Internet protocol in the 1990s and the mobile device ecosystem in the 2010s. In both cases, the largest gains were secured by those who identified the infrastructure layer before it became a mainstream consensus. Most retail investors miss these structural shifts because they are focused on the noise of the daily market. They wait for a company to go public and grow 10,000% before they attempt to buy in, often entering just as the initial growth phase concludes. Because SpaceX requires a vast supply chain of specialized partners to maintain its flight schedule, a window has opened for investors to back the publicly traded companies that the SpaceX empire depends on. In 1849, the merchants who sold pickaxes, tents, and shovels built more consistent wealth than the miners looking for gold. This market law dictates, during massive expansions, infrastructure providers capture the most reliable value. SpaceX is currently acting as the railroad for the new space age. To capitalize on it, the smart money is moving into the companies providing the steel, the satellite connectivity, and the logistics. The data supports this urgency. The global space economy is projected to exceed $1 trillion in the next decade, a valuation driven by government contracts and the scaling of private satellite constellations. First is Intuitive Machines, ticker LUNR. They achieved the first U.S. commercial moon landing, securing massive NASA contracts. They're shifting to a permanent infrastructure provider on the moon. Next is AST SpaceMobile, ticker ASTS. Their goal is to connect standard, unmodified smartphones directly to a constellation of massive satellites in low Earth orbit. While the execution risks are high, the total addressable market is significant. Success means providing broadband to billions in remote regions where traditional cell towers simply cannot reach. Then there is Planet Labs, ticker PL. They manage the largest fleet of Earth imaging satellites in existence, capturing a complete scan of the planet's surface every 24 hours. Planet Labs operates as a data-first enterprise. Their global imagery serves as a recurring subscription service, increasingly essential for agriculture, defense, and climate monitoring. For a speculative microcap position, institutions are watching Filtronic, ticker FLTCF. They manufacture the critical high-frequency components that enable space-based communications and satellite infrastructure. Ticker RKLB, Rocket Lab, is the only reliable commercial competitor to SpaceX for small-scale launches. While rockets provide visibility, 70% of revenue comes from their space systems division, building the critical spacecraft components other satellite operators need. Finally, Redwire, ticker RDW, specializes in space infrastructure and in-orbit manufacturing. They provide the sensors and solar arrays required to sustain long-term assets in zero gravity. These 6 companies represent the foundational layers of the orbital economy. Without their hardware and data, the expansion led by SpaceX cannot move forward. Institutional investors are accumulating these shares at current price levels, while the broader market is distracted by short-term interest rate noise. The difference between institutional and retail behavior is patience. While most traders wait for the dopamine hit of a breakout, asset managers buy in blocks over weeks and months to build significant positions. To manage this sector, keep position sizes small. Space stocks are highly volatile, and success requires waiting for structural pullbacks rather than buying at the top of a rally. Watch for specific milestones. Launches, contract wins, and earnings reports are the catalysts that move these tickers. Use these events to lock in systematic gains and protect your initial capital. Institutional risk distribution involves spreading capital across the entire stack. This grid shows how to balance positions between launch providers, data services, lunar logistics, and satellite connectivity to ensure you aren't overexposed to a single point of failure. The most important insight is that SpaceX's success validates the entire ecosystem. As they drive launch costs down, they make the business models of these smaller infrastructure companies more profitable and scalable. This rollout is a capital-intensive deployment happening right now. It is not a theoretical exercise. It is the construction of a new industrial base. A decade from now, these specific price levels and valuations will likely be viewed as a clear transition point in market history. Tell us in the comments which ticker you are watching. Subscribe to Streets for more smart money tracking. All investments carry risk of loss. Ensure you conduct your own research before trading.